What's up, everyone? Drew, aka Catching Rockets here. I hope y'all are having a good weekend, having a good day. We are going to be going over basically entries based off of volume profile. We'll also be going over entries based off of order flow. I will explain how to get order flow, pricing, and so on. Also, we're going to be talking about the books that I think are the most important books for trading. We're also joined by Emily today. She is going to be basically my test dummy, where we're going to, and I know Emily is very well versed and studied and has put a lot of time in. And so we're going to be putting her on the spot basically and talking about what entries are, for why one entry is good versus the other, so on and so forth. And first, right now, we're going to start off. And actually, I should say really quickly, I'm estimating this class is going to take anywhere from about an hour to an hour and a half. So should be pretty clear and concise and to the point. We're going to start really quickly with Volume Profile. This book, Volume Profile by Trader Dale. You can get this, download it for free on his website. It asks for your name and email address. But if you just go to Google, type in Trader Dale Volume Profile, you'll find this book. You can grab it for free, like I said. There's no tricks or anything like that. Like, it will sign you up for a mailing list, but you can always unsubscribe if you don't want it. It's a great book. You can also find it on Amazon for $10. Okay. We're not going to cover the whole book, but what we are going to cover is some of the key points, the most important points in my opinion. Definitely read the whole book, but we're going to dial in on entries and exits. That's going to be our point today. Starting on page 25, strategy 1, support becoming resistance and vice versa. So what this is talking about is when we see price come down to a level, bounce, come to a level, bounce, and then break through. For me, this is the key. Where he has the arrow here, I don't really agree with, but that's just my opinion, right? So I think this break here, this candle, is better because after this candle, we have full body candles closing below, or opening and closing below this level. On this candle, we close below. The next candle wicks up. It doesn't touch the level, right? But then the candle after that does. And I find a lot of times when we break through a level and then we keep wicking back through it, there's a good chance we're going to break back above it and it's not going to act as resistance. But so here where we break and we have these clean candles opening and closing below this level, and then we come back and retest it, this is the area where you would enter puts. This is the area where you enter short. For those people, for these trades, when I see a level get broken like this, I like to see at least 3 5-minute candles close below. So meaning if this first initial break is touching, of course it has to touch. That's the candle that broke. This is my first 5-minute close. This here, I want the full body candle, so the second candle to open and close below my level. I also want the third candle, full body candle, to open and close below the level. And then at that point, at any point after that, a retest is good for our entry, right? Elias, we could talk about that later. This is not the time or the place. But I'll be live later on today going over SPY and what I'm watching for there, and we can talk about it then. Our next, so basically this is the same setup, right? Where we've come to resistance, 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 gets broken through. Again, I don't like, I like that this time his arrow is pointing to this candle here, right? So here we broke through, but we wick back down below. This candle we completely ignore as far as an entry. Our second candle, we broke through, wicked back down a little bit, but we closed above our level. Second candle, full body candle, is above. Third candle, full body candle is above. After that, I'm looking for a retest at any point. When you get the retest is where you would enter long or enter calls. And you can see in both of these examples, you really have almost no drawdown. These are really high quality setups. Same thing, both on the calls and the puts. We have almost no drawdown at all, right? So this is one of my favorite setups. My second favorite setup we'll cover in a minute, and that's going to be based on order flow. This is also a great entry. I'm not going to really be covering this today, but I'm going to talk about it really quickly. It's called an open drive, and that's where you have like consolidation, sideways price action, and then a big move from there, where you come back to this level where you were consolidating, or where the big move started from after the consolidation. At that same level, you would enter in the same direction that the big move happened in. And then as far as your exit, we will cover that a little bit later, but there's a very obvious place to exit your trade here. And it's basically, if you take like this candle right here, the body of this candle, and draw a line across, that's where you would exit the trade. And I'll explain why when we get into it a little bit later. But this was a perfect setup with an entry and a very clear place to exit your trade. This is market open plus open drive, meaning like this is the beginning of the New York Stock Exchange session, and we get a big move down right at the open, and then when price retraces back and touches that level that we opened from, we would enter in the same direction as that big move, in this case puts, right? This is basically the same thing, but just for calls. I do like what Trader Dale has done here, as far as he's showing that low volatility area of consolidation, the big move up, and then the retest. And in this scenario, it looks like this trade might have failed, which I appreciate Trader Dale showing, because with trading, we always have to remember that we're always playing probabilities, right? And so not 100% of the time when we take these trades are they going to work in our favor. Sometimes they don't work out in our favor. And we just try to have like that winning edge. The way that I maintain that winning edge is every trade I take, I risk $1 to make $2 or more, preferably to make $3 or more. And also by making sure that I'm taking really good quality setups, which is what we're talking about today. And with those really good quality setups, I have about a 60 to 70% win rate. Doubling or tripling my money every time I win and having a 60 to 70% win rate makes me a consistently profitable trader. And that's what the goal should be, is to have that at least doubling your money on every trade and being like over a 40 or 50% win rate trader. Okay. We're going to skip to this next part, and then we're going to talk about the only candlestick patterns that I really care about. Well, actually, there's one candlestick pattern we're not going to be talking about, but that's, I mean, we can cover it later, but it's going to be the bull flags and bear flags, but I'm very particular about what bull flags I pay attention to and what bear flags I pay attention to. What we're going to be talking about, oops, that's not what we're looking for, is going to be pin bars. So these are considered strong highs or strong lows. It's also, you'll find out also with trading, there's several things that have different names for the same thing. So these are considered strong highs. They're also considered single prints. They're also called completed auctions. Same thing here. This would be, our bearish strong highs, strong low, or strong highs that we're looking at here. And these would be our bullish strong lows that we're looking at here, which is where it doesn't matter, again, if this is occurring on the top of the chart or on the bottom of the chart. On the top, we're going to see the bearish pin bars, right? Where price comes up and we get a really strong reaction, and price gets pushed back down. If it's at the bottom of our chart, price comes down and we get a really strong reaction and price pushes back up. That's the key with our pin bars, is we're looking for a really aggressive reaction. So in this case, when price gets pushed up like this and we see this aggressive selling, this is showing that sellers are in control at this point, right? The inverse here, where price sells off down and then we get this really aggressive move back up, is showing that buyers are being really aggressive in this instance, okay? So this here would be a strong low on the chart. This up here would be a strong high, right? So hopefully there's no confusion or question about this. It's where we have a wick all by itself that comes down and then price bounces, and we don't have any other wicks or anything else down at this price. Same thing up here with our strong high. We have this big wick that comes up, and then we don't have any other wicks up here at this level, right? The inverse of this is going to be called weak highs or weak lows, where we have a bunch of wicks coming up to the same price or the same kind of price range. They don't have to be equal, but just in the same general vicinity, which is just showing that in this instance here, the sellers are getting bought up, right? Buyers are pushing up, sellers try to push it back down, but the buyers push back up. Sellers try to push it back down, buyers bring it back up, sellers push it back down, buyers bring it back up, sellers push it back down, so on and so forth, buyers bring it back up, and then we have a little sell-off, right? So this would be considered a weak high or an incomplete auction, or also they're considered poor highs. So those are the three terms that you might hear this referred to as. For today, we're going to be talking about them as weak highs, but all three of those things will mean exactly the same thing, okay? That ended up going ahead of where I wanted to go, but that's okay. I'll just finish talking about this. I was expecting them to show an example of a weak low, but again, it will just be the inverse of this, where we have a bunch of wicks coming to the same price at the bottom. And now I'll kind of explain how we use these on our charts, right? Or when we're in trades, how these help us determine where to get out of our trades. And this is important because this helps you know where to exit your position so that you can try to get the most out of your trade, and you're not just randomly exiting a trade because you're in profit, right? So in this case here, we have a strong high. And when we have strong highs, we don't expect price to make it all the way back up there, because sellers were so aggressive here that we want to close our position before we get back to the strong high. So in this case, he's kind of taken the bodies of these candles here and gone right in the middle of it and drawn a line across, and that's where he exited his trade. Me personally, this little red pin bar candle right here, I would probably draw my line from there and close at the bottom of this candle. Hopefully you guys can see. I don't know if I can zoom in. I probably can. Oh, it's here. So this candle here, I would probably put my line at the body of this candle, at the bottom right here. So just a little bit lower than him, but same idea, okay? So basically, hopefully this makes sense. The theory is we don't expect price to come back up here. And if price does come back up here, there's something very key that we're going to be doing if we make an equal high with this price here. And we'll talk about that when we go back and actually look at charts. But we'll talk about what the entry would be if price makes it past there. But this is where you'd want to close your trade right around the body of this candle here, this red candle. Somewhere in this range is where you want to close. Okay. When you have a weak high, you expect price to break through there and go up and make a strong high or a strong low or a completed auction. So basically, like we were talking about when we were talking about this, the sellers are not in control here, right? Buyers keep pushing it back up, pushing it back up, pushing it back up. And it looks like buyers are eating up all of the sellers in this area. And in this case, we do get a little move down, right? But then when we come back to here, the sellers tried, but they weren't able to do it, and price broke through and went higher. So Trader Dale says one of the common mistakes is exiting your trade at this level, because when price comes back to here, we expect it to break through and go higher, right? So basically, you would want to look left and see, like, if you have a strong high over here, to where you want to use that as the area to close your trade. Okay. So this is talking about getting into a trade based off of that pin bar candle, where we have the strong high, rejection of higher prices, and from there we get massive selling, right? And then when we come back again to the bottom of the body of this candle here, is where we would enter in the same direction. In this case, it would be puts, right? Hopefully this is making a lot of sense to everybody. This is, again, just showing we have that weak high. We expect price to break through and go higher. And so we would want to close our trade at this level, right? That's going to be it for what I'm going to cover from this book from Trader Dale, Volume Profile. From here, I'm going to pull up the chart. And this is where I want participation from Emily, if possible. So we're looking here. I'm actually just going to hit replay to take away some of the noise. This is where we broke below, right, our support level. Price came back up. And would this be a good spot, Emily, to hop into a puts? If so, why or why not? Previous week value area low.
I think because we kind of sliced the zone, we're back at it, testing it. I would probably, this is the 5 minute time frame.
Actually, let me do this. Sorry. Let's go to there. Ignore what you saw. We
Okay.
broke through our level here, came back. We have more than 3 5-minute candles closing below. We retest here. Would this be a good place to get inputs or not? Literally just based off of this information, I want you to forget the last 2
Yeah.
candles that you saw. Yes.
I would say yeah, just because I also see decreasing volume as well.
Awesome. I mean, we weren't even talking about that, but that is a very good point, because I talked about this live on Friday when this was happening in Keenan's Discord. I said we have decreasing volume as we're approaching a resistance level. And what that basically means is, in this case, so I wasn't actually planning on talking about this book, but since Emily brought this up, and it's a really good point, and this is really good information, which just makes me so grateful that I decided to bring somebody on this live with me, because I would have not mentioned this if Emily didn't bring it up. But there's a book called Volume Price Analysis by Anna Cooling. I'll actually probably link it really quick. Let me do that. I know all of the books are linked in the description of the video anyway, but let me just throw it up really quick. And so in this case, we have what would be considered... Sorry, I'm grabbing the link and trying to talk at the same time, and I know it's not going to work out well, so I'll just stop. Here's the link. Thank you, Lisa. I appreciate that. So this is the book Anna Cooling's volume price analysis, where we use volume at time to to try to determine what price is going to do. And in this case, this is like a clear indication of a reversal, because our green volume is decreasing as we're approaching a resistance level, right? And so then another question, Emily, if you're entering puts here, where are you going to be closing your trade based on the information that we have on the chart?
July value area low.
Okay. What about our strong low here?
Oh, yeah, that's a safe target. Yeah.
So
Yeah,
we would want to close at the bodies here, right? If we're
right.
playing safe. And so just to be clear, um, I mean, I like July value area low in the sense that I would say, based on the information we have on the chart right now, I think most people would be happy with a 2.3 point move. That did not sound right. 2.3 point move to the downside, right? Like this is, this would be a pretty nice come up on SPY,
Yeah.
catching over 2 points, right? Because of this strong low, like Trader Dale talked about, there's a really good chance we're going to be bouncing in here somewhere, right? In this range. And when I say this range, I would literally say all of this right here would be the zone where I would be looking to get back into calls. Again, based on what we've talked about, being completely frank and honest, I saw the chart obviously before I hit replay, but I really don't remember what happened. But I do remember I called all of this out live, and didn't miss on a single trade on Friday in Keenan's Discord. This can be verified live in the chat. It's all there, before the moves happened. So, Emily, one more question for you. Let's just say by chance, so we exit our trade here, right, to be safe. But let's say by chance price comes down to equal with this strong low. What would our immediate thing to be to do based on this?
So if the price was coming down and made an equal low, um, I would think I would think anything can happen. I don't know. What would you say?
So anytime we have a strong low, um, the buyers were so aggressive here
Mm-hmm.
that if we come back to it, this would be what we call like our equal low, right? Um, that's exactly what I would expect.
Oh, so if we had an equal low, what I would do,
Mm-hmm.
I would probably short it or take the put past it because like it's an equal low and the market likes to take out equal lows compared to like if that was strong, like the first example we went over.
Generally, when you come to a strong low a second time, you're going to get a bounce.
Okay.
I mean, again, it's okay. There's nothing wrong with being wrong, right? So I'm going to say this because I don't want Emily to be embarrassed, and this is not BS. This is 100% the truth. I am still a student, right? I don't know everything. I'm always striving to learn more. I'm always reading books. I'm always studying. I might know more, than like the average person in Keenan's Discord, but I definitely don't know more than everybody. And there's always, people that know more about like, I know for a fact there's people that know way more about individual candlestick patterns than I do, because that's not something that I'm good at. I focus on the candlestick patterns that are strong lows, strong highs, or poor lows, poor highs. That's really the only candlestick patterns I care about.
This is good to know.
Yeah, so again, there's never anything wrong with being wrong. That's how we grow and learn, right? Is through making mistakes. But let's check ourselves here and see what happens from here. Again, this would be where I would grab puts and I would close here. If by some chance price comes to here, I'm 100% hopping back in calls, and I'm going to take it all the way up to the previous week value area low. But this entire range, I would be seeing how price is reacting when we're here, and I would be looking to get in calls in this entire zone. Okay. So again, let's just step forward and kind of see what happens. Obviously, we had drawdown, right? We were red for a minute, and then price starts going in our direction. They even wicked back through, a little sketchy, right? We get a little retracement here, no big deal. They are taking their sweet time. More retracement. This is scary now, right? If you're in this play, this is scary.
I'm getting
Actually,
scared right now.
I think I closed here. Yeah, actually, I'm tripping. I closed here, but it's okay. I'm making a mistake in this moment, and that's fine. All part of learning and growing, right? So, like I was showing earlier on volume profile, this candle here, right here,
The
is the one that
doji.
you want to close on. Yeah. So when we come back to this level, like this range right here, me personally, I would close at the very top, and you can see that was the spot. And so I was actually wrong when I was going over this live right now. But again, I don't. It doesn't matter. I'm always okay with being wrong. Um, that's how we learn, right?
You and me both. I just learned something right now.
But I know we end up reversing back down into this zone again, and actually, yeah, here it is, right there. So either way, I mean, if you didn't get stopped out, you were good. Um, Now, I want to ask you, um, why was this entry here good and this one here wasn't?
The first one would have been good because it's the first test of
Mm-hmm.
that resistance at the previous week value area low. Whereas
Mm-hmm.
the second time when we come to test it, like this roof or ceiling, shall we say, it's kind of getting a little bit weaker. So
Yes. And
more
then
like
the other thing that you mentioned, our volume decreasing as we're approaching, right?
yes.
Where we don't have that over here, right? Actually, volume increased slightly.
Mm-hmm.
The one thing I would add, and I think you basically touched on this, where you were saying like the ceiling was getting weaker, was here they're already showing weakness, right? Where we broke back through this level,
Oh yeah.
and it's already showing us like the next time price comes here, it's probably going to be fairly easy to break through this level. But then there's also one other distinction here. Do you see it or no? And if you
Um,
don't, it's okay.
is it, I want to say equal highs, but they're not really equal. Is it,
You're on the right track.
could it be a rejection, like a small
What are
little
we
bit?
talking about really today? Like strong highs, poor lows.
It's a poor low or
It's a poor high, right?
damn it.
No, 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 but it's okay. So this right here is exactly what we were talking about on Trader Dale's book, where this is a poor high, right? It's only two candles versus like Trader Dale's example was like five wicks coming to the same level. But from what we've already learned today, what we know is when price comes to this level, we would expect it to break through and go higher, right? And so that's exactly what they did. Once you see this and you're in long from here, and hopefully there's some people watching that will remember this from Friday. We were talking about this. I said my first target was to trim here at the previous week value area low. My second target was to trim here at the July POC, right? And the reason for the July POC is this poor high. My last area to trim would have been up here at the poor low. However, we never made it back up there, and I would consider this a strong high, even though we don't have a wick. We opened and sold off really hard from there. Just for funsies, though, if we did come back to here, what should we do, Emily?
Um, if we're going back to that poor low
This up here.
at 626.
Yeah,
If this is when the session just opened, 6:30, that would be like an open drive retest. So we could
I love you.
short it.
We are going to grab puts so hard right there,
Yeah.
right? They didn't give this to us, but if they did, boom, no questions asked, we slap puts. And then the same thing, if we slap puts, what do we have here now?
Poor low.
Thank you. So if we did slap puts here, and again, this is hypothetical, what would our target be?
We can then target, I would say the body of the candle, but maybe that tail of the candle. What would you say?
I would say right here,
Okay.
61 or 621.03. Right there, I would be getting out because we still have this strong low,
Mm-hmm.
right? Or yeah, I was going to say here, but no, we have. So this is the first place we should have closed on the first trade. Now we've created this poor low where we came to it, they bought it up, 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 came to it, we came up here, and now we would expect price to break through and go lower. But because of this strong low here, we're not expecting them to go too much lower. They might. Again, I really don't remember what they did from here, but this would be our target to safely get out of the trade and take our money and run, right? I'll start. Yes. So, when I'm doing my charting, right, on daily levels, I use 30 minutes. So here we have a strong low, here we have a strong high, and here we still have our poor low, right? When I'm trading, I'll accept, on 5 minutes, strong low, poor high, poor low. Okay. Good question though. But when I chart, like when I'm looking at the market, like I'm going to do in about 4 hours here, 3.5 hours, when I look at SPY, all of those will be charted on the 30-minute time frame. The strong lows, strong highs, poor lows, poor highs. Okay. And if we look like on my chart, I have them, right? So here's a poor low, here's a poor low. That's all I have right now, I think. Yeah. But yes, I chart them on 30 minutes, and I'll also pay attention to them on 5 minutes. Okay. Good question. Actually, speaking of questions, let me just read through the chart really quickly. A poor high should be distribution, right? They're selling. That was to Michael Cruz, asked if a poor high would be accumulation. I don't expect lower than this, no. Okay. It looks like I've answered all of the questions. Let's go ahead and see what they do from here. Again, this whole zone here, I would be watching to grab calls. And I would just put my stop loss. I like to look left. But based on looking left, there's not too much information, like at least on the 5 minute. I would probably want my stop loss to be below this here. I mean, ideally, like you would want it below this strong low, but there's no way that we can have that wide of a stop loss without targeting really high up. Oops, I don't know why I deleted that because I still want that on my chart. This is ideally where I would want my stop loss to be below, but I have to make sure that the risk to reward is there before I take the trade, right? So if we come back to our price action here, let's just say I'm getting in right here when we first tap this zone. And again, I can target higher because of the poor high up here at the top. But I also have to pay attention to what time it is. Oh, it's 10 o'clock in the morning, so I'm okay. If I do something like this with my stop loss, oh, see, it's really close. I can do this and have making $2 to risk $1. Ideally, yeah, something like this. I don't want to go too high because I have the strong high up here at the top. So, again, because of the time being 10 o'clock in the morning, I would take this trade. I would want to make sure that I have contracts that are at least a few days out because it's already 10 o'clock in the morning and maybe I don't make it up here. But, and I don't want to get destroyed on theta on 0 days, right, at 10 o'clock in the morning. And I should mention I'm on West Coast, so 10 a.m. is actually 1 p.m. Eastern. So if I take this trade, again, if I'm not willing to swing trade it, I at least want time so that I'm not getting destroyed on theta. And even if I have to close it early because the end of the day is approaching, hopefully, I'm green, whatever on the trade. But my stop loss would be down here, my take profit up here. And again, I'm not much of a swing trader, so my plan would not be to swing this, but it would be to just take my profits if I'm forced to at the end of the day. But again, that's going to be more up to the individual. But this is the spot, no questions asked, where I would be hopping back in calls based on the information that we have. And especially if we come to here, I want to be in calls. And if they stop me out, they stop me out. But this is, again, where we make that equal low that we were talking about, where we come down to where a strong low is. Or same, if we came up to where a strong high is, you'd want to grab puts. And in this case, they came to it. They wicked down a little bit. They didn't stop us out. Again, this is not planned. I didn't know where price went. I don't remember. I didn't memorize the chart. None of this is in order to, to look like I'm correct. Like earlier, I made a mistake and said to close down here instead of up here where we should have been looking to close. And in that case, like I made a mistake in front of all of you. And it's not because I'm trying to memorize the chart. It's because I'm a human and I'm telling you how I trade. And sometimes I'm still going to make mistakes. And when I make mistakes, I go and I journal it, and I chart what I did wrong or what I could have done better or what I did correctly. And that way I can keep doing the things that I did correctly. The things I did wrong, I can improve on. And so hopefully I don't make that same mistake again. And it looks like that's the end of the day, right? Yeah. So unfortunately, this trade, we would have been pretty green. But again, due to the time that we entered the trade, we never would have made it to our profit level. And we probably due to theta would have ended up closing at a loss unless we were willing to swing trade it. But hopefully the concepts make sense. That's what's important, right? So anytime we come to an area where we have a strong low like this, we want to immediately hop in calls. Anytime we come to an area where we have a strong high, we want to immediately hop in puts. We want to use our weak lows. So in this case, here, if we were in puts, right, from up here, we would know price is probably going to go lower. And so we don't want to close right here. We want to close. I mean, for me, it doesn't change it too much because I would be closing at the body of the candles here. It's still just a little bit more profit, but not a ton more. But you can see kind of based on that information, when we got there, that would have been a great spot to close because after that, we started chopping sideways a little bit, right? Before they finally ended up going much lower. But so those poor lows, we expect it to get broken and for price to go lower. Up here, we have the poor high, right? where if you were in calls, you would expect price to break through and go higher. Again, this one here was called out live based on our strong low here being at this area where, for one, we're closing our puts, and for two, we're hopping into calls, right? And then we have this poor high at the top where we would expect price to go higher. Even with that said, I told people trim one contract here if you have multiple contracts, trim a contract here if you have multiple contracts. And for the people that saw this live in Keenan's, when we broke through this and came to here, I told everybody at this point, move your stop loss to 623.33, meaning if price goes below there, we close out the trade. And then at that point, if you still have remaining contracts, we want to be targeting up here to our open drive. But that didn't happen. Price came back down. We closed out here. Okay. At this point, I would just say, anybody in the chat have any questions about what we've talked about regarding poor highs, poor lows, strong highs, strong lows, or like open drives? We're going to be going a little bit more in depth, but I'll give everybody a chance really quickly to ask questions just in case there are any. And while I'm letting that happen, I'm going to load up another piece of software, and we're going to talk about some slightly more advanced concepts. As far as taking into account market structure, I mean, it's always in the back of my mind. But in the case of market structure, our strong low is always going to be a lower low. And, well, I take that back. It's not. Well, yeah, it is. It's always going to be a lower low. And our strong highs are always going to be a higher high, right? Or for the most part. Like here, if we broke down, created a strong low, and then came up here and created a strong high, this wouldn't be a new higher high yet. But here it would be if we created a strong high here, right? No, Michael, not when you have a strong low. Yes, All-Star. Now that it's been tested, the next time price comes to here, you kind of expect it to break through. Not only that, so basically at this point, actually, let me do it this way. Right here, we have new information, and this doesn't matter anymore. It's done, right? Now we either have a new strong low or we have a poor low. And in this case, this is a poor low, right? So this is no longer the current information. This is the new current information. Make sense?
And it's a poor low because it failed to make a new higher high?
That is part of it, but you have these wicks that are so close. You see the candles where
Yeah.
these two are pretty close to each other, whereas here, this wick doesn't come down, as far as close to the bottom as this second wick here.
Oh, I see.
Yeah. But yeah, also, I mean, that's something very important to notice is that we did not make a new higher high, right?
Could I give a mention to something from Anna Cooling's book that has personally helped me?
Of course, absolutely.
In her book, she mentions like whenever you're coming near significant levels to keep an eye on the volume. So if we look at the green previous week value area low, if you see like all the way towards the right, like the last candle, you see that as price is coming to test previous week and it like rejects it, you can see that selling volume is increasing. So that's something to keep in mind as you're like approaching like significant levels to like see how is volume relating to it.
Absolutely. So we talked, I mean, you were the one that mentioned it here, and it was a really good mention where price is pushing up and volume is decreasing as we're approaching a key resistance level. And what you want to see there is actually at that point where you start rejecting, you really want to see that red volume increasing as that rejection happens, which we get here. We didn't get it here, right? Which is kind of why we didn't get much of a rejection and then price bounced back up, right? But yeah, you're absolutely right. As you're approaching your resistance level, you want to see the green volume decreasing, and then when we hit it, you want to see that red volume really come in, right? So yeah, I mean, Anna Kulig's book is amazing. It's a really important read if you want to be, a serious trader. Oh, this might be bad news. Okay, good. For a minute there, I thought my chart was not showing the information that I need. So I'm going to be talking about a program called Quantower. And there's only one issue with me sharing this with you guys, which is you have to have a Windows-based computer to use this. But I wouldn't let that discourage you from watching this part. I would basically, like, if you don't have a computer with Windows, I would just make it a goal for yourself to get to that point. So for me as a trader, and like no issue sharing this with you guys, when I first started trading, I traded just on a phone, right? So I would look at charts on my phone, I would trade off of my phone. And then eventually I realized that wasn't very effective, trying to switch back and forth between charts and a trading platform. And so I bought a tablet, and I started watching charts on my tablet and trading on my phone. And probably like a lot of people, like I started trading to make money, to make more money. And so when I started, I didn't have a ton of extra money, which is why like I was like, okay, let me just use my phone. And then I quickly realized that wasn't, very effective switching back and forth. So I saved up some money and I bought myself a tablet. And then that worked well, for a while to a degree. But it was always a goal in the back of my head to get to the point where I would have a desktop computer where I could actually have multiple screens, sit down and actually be able to trade, and have all the information available to me and be able to enter trades more quickly and close trades more quickly. But again, I'm not trying to make anybody feel inferior because they don't have a computer. Again, I had to build up to it. I saved my money. I worked hard. I grinded at trading. And I eventually bought myself a really nice computer with two 27-inch monitors. And then I grinded more. And I finally bought myself a 49-inch monitor. And so now I have a computer with two 27-inch monitors and one 49-inch ultra wide. But again, I had to save. I had to grind. I had to hustle to get to this point. So if you're not there, it's okay. But again, I wouldn't dismiss the information I'm about to share with you just because you're not at that point yet. Absorb the information and maybe grind and strive to get to that point as well, just like I had to do. Okay. So the particular software I'm talking about, and you could also, like if you have a Mac, you could install whatever Parallels or whatever it's called with a Windows partition and install this software. I just wouldn't use it to trade if you're doing it on a Mac because you're going to have some pretty significant lag. But you can use it after hours for what I'm about to show you guys as far as finding those high quality setups on your charts. Okay. And if you come to Quantower, what you're going to have to do, I mean, first of all, you'll have to download it and install it. But once you do that, you're going to want to pay for their software. You can either pay monthly, 6 months at a time with a 20% discount, 30% discount for annually, or lifetime is like $1,600. What I do is I only use the volume profile portion of Quantower. Eventually, one day, I'm just going to buy the lifetime membership once I'm like 100% certain that Quantower is like the platform that I want to be trading off of for a significant amount of time. But for right now, I just go here and I buy the pro features separately, and I just pay for volume analysis. And this gives me all of the stuff that I need to really find these good high quality setups. Okay. So with that said, we're going to open up another book by Trader Dale really quickly. This one is called Order Flow by Trader Dale. And again, same thing. You can go to his website. You can download this for free. You can go to Amazon. You can buy it for, I think, $10 as well. Today, we're really just going to focus on one part of this. There is a lot of, I mean, again, read the whole book. There is a ton of good information in this book, but we're going to focus on basically like this book. He shows stuff that you can use in confluence with other things like volume profile, poor highs, poor lows, strong highs, strong lows, so on and so forth. And then he shares a standalone trade setup, which is what we're going to cover today, where you don't need any other confluence. You can just use the information alone that's on the chart. Sorry, and I'm trying to find it. Again, so this is just loaded with information. So what we're going to be talking about for the probably last 40 minutes of this class is going to be our heavy volume clusters, or I call them high volume nodes. There's something very significant that we're looking for. So on these charts, let me just kind of show you an actual chart. There's a lot of information. Excuse me. I'm not going to be teaching about all of it today, but these are all of the orders that took place on ES, which is the basically the SPY future. And again, all of the orders that took place here. So this is both buying and selling, but these are orders that actually were placed and were filled. And with this, you can even make this more complex basically by going to imbalance on your cluster chart, which will give you your bid on the left-hand side and your ask on the right-hand side. And again, I'm not going to go too in depth with all of this, but this is all of the orders that were placed on the bid. This is all of the orders that were placed on the ask. And I will say, for the purpose of this class, I have a template. If you want your charts to look the same as me, if you decide to download Quantower and you want to use this, you can literally just send me a DM, ask me for my Quantower template, and I will send it to you. And you can put it into your chart. And then literally all you do is right click up here and then go to apply template, and you would choose Drew. And then you would have the same setup. What we're going to be doing for the purposes of this high volume cluster that we're talking about, or high volume node, is we're going to take our chart and we're going to switch it to from imbalance to single, which just means all of the orders are shown together. And then under data type, we're going to change it to volume. Again, so that we see all of the orders on the bid, all of the orders on the ask together as a group, right? And basically what we're looking for at that point, I don't know if it's better to show you on the chart or to show you here, but we're looking for an area where we have a high volume cluster. Once we've established high volume cluster, then we're either looking for a full body candle to open and close below this level, or a full body candle to open and close above this level. If it's below, then we would assume that the majority of the orders that came in here were sellers. If it's above, then we would assume that the majority of orders that came in here were buyers. And so the next time price comes to this level, if it's buyers, we're going to slap calls. The next time price comes to this level, if it was sellers, we're going to slap puts. And so what I'm looking for is actually some key things. I always look at these charts on either a 30-minute time frame or a 1 hour time frame. Both are completely acceptable. I would like to show you guys like live examples of where this worked and how to do this. Here's one right here. Okay. So we'll use that example. And what we're going to do is this was 7:31 at 12 p.m. or 12 noon. And then we have so I guess I should explain this about the chart. So this red bar here, this would be our candlestick. This green would be our candlestick. This part up here is our wick, right? And this is our wick on the bottom. So here on a 1 hour time frame, we have this massive amount of orders that came in right here. And if you basically compare everywhere else on the chart, right, there's nothing, even if we come all the way back to here, like the highest was basically 16,000 orders, which is still massive, right? But when we come down to here, we have 27,000 orders traded right here. And then we have basically another 26,000 orders traded here. This is a big level, right? And at this point, you know, like right here, we don't know what they are. Are these sellers? Are they buyers? We don't know. Then price pushes down. We get that full 1 hour candle opening and closing below this level. And now we go, oh, sellers. The next time price comes here, no questions asked, you slap sell. And then what you're looking for, do we have a poor low? Do we have a poor or a strong low? We figure out where we're going to close our trade based on the information that we have, right? So we'll go put this on the chart, and then I'll show you also how to transfer it onto the SPY chart. That way, you know, again, if you're using this, I trade futures. I prefer trading futures, but it doesn't matter what I prefer to do. If you want to trade options, you want to trade SPY or whatever it is, you can take these levels, transfer them over to your SPY chart. I'm going to show you how to do that. And then once you have those levels transferred over, you know where to slap puts, right? So again, this is 7:31 is the date, 12 noon. We're looking at 63.71 to 63.76. So let's go to ES. I probably already have this drawn. Let me just go to a 30-minute chart. Where's 7:31? So yeah, I do have it drawn. So this is actually really quickly. I'm going to move this off my screen because I want to, if I have that drawn on SPY already, I want to show you guys how to do it without having it there. Actually, I know what I'll do. I'll use a different chart. Okay, I'm going to bring this back up here. Oh, I think you guys are about to hear my son drumming, but sorry about that. So this is the one that we're looking at from 63.71 to 63.77. And it was actually 63.76, I believe. Yeah, it was 5 points. So I have this a little bit too high. There we go. So again, I'm just taking that, let me do this really quick. So this is what we have. We recognize that there's that large high volume node, or actually, let's do this. We recognize here that we have that large high volume node. We don't know if it's buyers or sellers at this point, right? We need to wait for those full body candles either below or above to determine if this is buyers or sellers. And it looks like this is No, so yeah, it happened right at 12 o'clock. But then, unfortunately, the trade happened um, after hours. So if you were an options trader, you wouldn't have been able to trade this one. But that's part of option trading. Like you win some, you lose some. But for futures traders, you could have totally taken this trade. What I'm going to do is now that I have this level marked on ES, I go down to a lower time frame and then I try to figure out. So like this 105 candle, basically right at the body is where the bottom of this zone is, or even the bottom, the body of the candle before the 1300 candle is where the bottom of the zone is. And again, this is kind of how I just translate it over to SPY, and hopefully this makes sense to you guys. But so this is July 31st, and again the 1 o'clock candle. So if I go to SPY here and I go to that 5 minute chart, my 1 o'clock candle on July, I'm going to have to go to extended trading hours. Should be right there. So this candle here is where the bottom, well, the body of this candle is where the bottom of that zone starts, right? And again, we already know this isn't going to be helpful for options traders, but again, it plays out for futures traders. And then to find the top of the candle, it's just shy of the top of the wick of the 1255 candle. Again, you're not going to get it perfect. Wait, did I choose the wrong candle? No, I didn't. So we're just shy of the top of this candle here, right there. Again, I'm going to stop looking now on SPY because you wouldn't have been able to trade this based on it happening in the overnight session, but wanted to show how to transfer it over onto your SPY chart. I'll just look at candles. And if I have to, I'll even go to like a 1 minute time frame to see like if I can figure out like a candle. Like so here on the 1 minute time frame, this 1304 candle, again, the body of the candle's basically right at the bottom of that zone. And then again, the wick of the 1 o'clock candle is basically the top, right? So that's just kind of how I transfer it over onto my chart is I'll just look at individual candles where like the top is the top of my zone and the bottom is the bottom of my zone. And then I'll use those candles as reference points on SPY. And for people that don't know, ES is literally the future for SPY. So this translates like if you take the candlesticks and did a mirror image of this on the SPY chart, the candlesticks would match. Okay. But so for, again, for people that trade futures, you could have taken this trade. Here we get that first full body candle, right? That opens and closes below. So now we know that that massive order that came in was sellers, right? And this is not retail. This is institutional trading. I mean, there's some retail in there, but to give you guys an idea of what we're looking at here, let's just say 27,000 orders. We got to do a little bit of math, but basically every 25-cent move on ES is $12.50. You multiply that by 4 to give you your 1 point move, which is $50. So every 1 point move on ES equals $50, plus minus profit or loss. And then to get this quantity here, actually we'll do the exact amount, 26,908. So if we multiply this by 26,908, that would give us this price here. And if we do it at the current price of ES, which is 6,375. That's the size of this, the orders that took place right here. 8 billion, $8.5 billion of orders right here. You know, this is not retail, right? Or again, there's some retail in there, but this is institutional, either buying or selling, right? And so is this, again, the way that we determine if this is buyers or sellers is we look for that full body candle below or full candle body above. In this case, we get our full body candle below, full body candle below, full body candle below. We're waiting for them to retest this area. And we want to join that 8.5 billion order that went in. And one of the things that we should know about institutional trading is they'll put their order at this price, right? And they'll get filled, you know, as many contracts as they can. And then when price moves away from it, and then price comes back to there, they probably have more orders sitting there waiting to be filled, which is going to send price down. While we're looking at this, what do we have here, Emily?
Equal lows.
Or poor low, right?
Oh, and that.
Yeah, same thing. Again, like I said at the very beginning of this class, there's a lot of different terminology or words that mean the same thing. But for the purpose of this class, we're calling them poor lows, but it is also an equal low. So the next time price comes here, we would expect it to break through and go lower. So my target would probably be right here for my first target. I would trim contracts here, and then my next target would be down here. And then I would trim contracts there. I would also look left and say, is there any major support before I get here? And there is. This right here, if I can target it, strong low, right? Right there.
Mm-hmm.
So now, having looked left, I would trim a contract here, I would trim a contract here, and I would close here. Again, I have no idea what they do. I don't memorize the chart when I'm teaching. I'm showing you guys based on the information that's available to me. And again, I don't care if they come up to here, like 100%. People that follow me on YouTube know this. I don't care if they come to here and I get a tiny reaction down and then they go and do this and I get stopped out. I'm perfectly fine with that because we're always trading probabilities. And probabilities are going to go against us. And if we're not okay with taking a loss, you're never going to be a good trader. To be a good trader, you have to learn how to be a good loser. Until you accept that you're going to be wrong anywhere from 60, 70, 80% of the time. Or no, you shouldn't be that wrong that often. Let's go the other direction. Let's say you're going to be wrong 30, 40, 50, 60% of the time. You have to be okay with that. When we start getting frustrated when we're wrong and YOLOing into trades is when we make mistakes. That's where we blow accounts.
I can attest to that.
I think everybody can.
I also want to give a shout out to you, Rockets, because I will be honest. I remember back when I first started trading, I got a whiteboard and I wrote my goals on it. And the very first thing says 1 trade a day. I have since then blown like a few accounts, not a lot. But the other day I had an epiphany and I looked at this whiteboard and I was like, wow, where would I have been today if I committed to like 1 to maybe 3 trades a day? Like fast forward to now, it's August and I started learning in November. Mm-hmm. So I'm gonna practice it. If anyone out there is struggling, I recommend you practice it too.
Okay, so we'll talk about what Emily just said. I have to correct you on one thing though. It's not 1 to 3 trades a day. It's 1 trade a day.
I know.
There's no getting around it. And the second you try to manipulate it, you're just shooting yourself in the foot. And the analogy that I use has to do with guns. If you don't like guns, I apologize, but
yeah,
it's the best way that I know how to describe this. When you have only 1 trade a day to take, you're only allowed to take 1 single trade. You only allow yourself to take 1 single trade. You're going to wait for a really good quality setup, which is really what we're talking about today. We're
Mhm.
talking about A++ setups, and we're talking about A++ exits, right? We're not talking about, oh, let me take a trade here and hopefully it goes in my favor. And if it does, the second I see green, I'm going to close it because I don't really trust it. I just want to make a little bit of money. And then that way I can pat myself on the back and say, oh, I made money today. But then tomorrow when I take a trade, it goes against me and I take a bigger loss because I didn't really trust my levels the day before. And I just closed it as soon as I was green. But when it was red, I started praying, saying, oh, please, please reverse go the other way. And you stay in the trade longer because you really want it to just reverse so that you can be right and go and pat yourself on the back again and say, I was right and I got another green trade today, even though you only made $2 because you closed it the second it went back to green because it was red for a little bit. So you were really scared that it was going to go even further red and stop you out, right? And that's just not the way to trade. We have to trade levels. We have to trust our trades. We have to take the stop losses and just let them be what they are. It's going to happen again. Anywhere up to like 50% of the time, 60% of the time, you're going to get stopped out on trades. And that's okay. As long as you're doubling your reward versus your risk on every single trade, even if you're losing 60% of the time, you're still very profitable and you will grind up to being a millionaire by doing that, by trusting your levels, right? And we have to be okay with those losses. They're going to happen 100% guaranteed. And any trader that doesn't talk to you about taking losses is not worth listening to because they are lying to you and they're trying to scam you and take your money because they're not telling you the reality of trading. Okay. So hopefully this is very clear. The analogy that I use on one trade a day is if I have a gun and somebody's trying to kill me and I only have one bullet, I'm going to make damn sure that I have my sights dead in the center of that person's chest before I pull the trigger, right? Versus having like a machine gun where I've got a 30 round magazine and I've got extra clips next to me and I can just, pop my gun out and shoot some shots off and, like suppressing fire and scare them. And not really be worried about the accuracy of my rounds because I've got, 500 magazines loaded, ready to go with 30 rounds in each magazine, and I can take as many shots as I want. Again, this is how I compare it to trading is if you can just take as many shots as you want, you don't really care about the accuracy of your entry or the accuracy of your exit because we have this mindset of, well, let me try to take a trade here, and if it goes against me, I'll make the money back on the next trade. And then you take that trade and it misses, and then you go, okay, well, let me try to take a trade here so I can make back what I lost earlier. And then it goes against you. And then you go, okay, let me try again here. That way I can make back what I lost on the last two trades. And then the next thing you know, your account is blown, right?
Yep.
Versus let me wait for a really good setup to come to me, and then I'm going to take my one trade. If it goes against me, no big deal. I'll come back tomorrow with a clean slate. And this is important. If you come back the next day and your mindset is still, let me make back the money I lost yesterday, then you're not trading the next day because you should be coming to the chart with a clean slate, fresh mind. It doesn't matter what happened the day before. Let's just say the day before you lost $100. Your mindset should not be, let me make $100 to get back what I made yesterday. If you see a setup on the chart with an A++ entry and you're only going to make $50, you take that trade. And sure, you're still down $50 from the day before, but it doesn't matter what happened yesterday. We're focused on today, and we're going to take whatever the setup is that comes to us, and we're going to exit the trade wherever it is that we have to exit the trade based on the information on the chart, right? So again, I don't care if price comes to here and then shoots up and stops me out. It doesn't matter. Again, we're trading probabilities, right? So I don't really care what the end result is. What I care about is if I do this consistently over and over and over again, and I use proper risk to reward, then I should make money, right? So I'm going to say for my first trade, basically, what I look at is the wicks. I look to the left, and if I kind of draw a line right here, this is kind of what Trader Dale talks about. This is support. It got broken, became support again, came back to its support, support, broken, became resistance, and now we're below it. So if by some chance price goes through my entry zone here, this red rectangle we have, I would expect price to reject from there and go down, right? If they break this level, they're invalidating my trade, and I need to take my stop loss and go about my day and move on and come back the next day and take my next trade, right? So basically, if they do invalidate my trade, I'm going to give them a little bit of room to say, oh, this was a stop hunt. And now that everybody that had their stop loss right at this resistance level, we took their liquidity, we're going to reverse it and go back, right? So I want to be the smart retail trader where I give them a little bit of room to do that liquidity run and then go. But basically, once they do this, most likely they've invalidated my trade. So if they do this, I'm okay with it, right? I'm much more okay with them doing this little liquidity run and grabbing, the majority of retail's liquidity, again, that had their stop loss right at that resistance level. So that's how I do it. With this said, this would be my first trade, right? I'm getting $2 for $1 risked. My next trade, so like this is if I have one contract, I would just take this. If I have two contracts, then I'm going to be doing exactly the same thing, same stop loss, better take profit level. Now I'm getting over $3.50 for my $1 risked, right? And if I have more than two contracts, then I'm going to do exactly the same stop loss. And my take profit is going to be here. Oh, sorry, that's the same one. My take profit's going to be here, and now I'm making $4.50 for the $1 risked. If you're trading like this, I'm going to give you guys a really quick example of a 4-to-1 risk to reward ratio. So let's see. This is sorry, bear with me for just a second here. And then I think, oh yeah, I can zoom in here, right? So if I'm using a 1-to-1 risk to reward, I have to be right 60% of the time to be slightly profitable, right? Where we switch to that one risk to reward, this is actually slightly wrong. You have to be 34% correct to make money. I think most people would agree that 34% correct is not difficult when it comes to trading. If you're at that 1-to-4 risk to reward ratio, if you're correct 20% of the time, you're break even. 30% of the time, you're making big money. And then anything higher than that, it's just bigger and bigger and bigger, right? When you get to 1-to-5, like you only have to be correct 20% of the time, so on and so forth. Like it just gets better and better, right? The further down we go. Okay. So let's play this forward and just see what happens. But again, this is my, let me just show it really quickly before I actually move on. This is that chart, right? This is our high volume cluster. where just massive amounts of orders were traded. We got that full body candle below. We come back, retest that level. We would enter puts or enter short if you're trading futures right at that level. And then this is the result if you took that trade. Again, I don't know what they did. Oh, they would have stopped me out, is what they did. And again, that's fine. I probably would have re-entered if I got stopped out like that. That doesn't work for people doing the one trade a day. But again, I'm perfectly fine with you guys seeing a probability where this doesn't work. So, because again, we're trading probabilities, they don't always work in our favor. If it did, there our first profit target got hit. And we know this is a good profit target by the fact that we came down and then wicked up really quickly, right? Let's keep playing this forward. I have no idea what price does from there. So far, looking like our first profit target is really good. Actually, what I should do is switch to 30 minutes. Second profit target, third profit target. They just about came to, you guys can't see what this is, but this is a buy side imbalance, which I can show you guys also. I wasn't planning on talking about it, but we can talk about it. I think, yeah, so here they formed a bear flag and then they dumped, right? And they're probably coming down to this buy side high volume node next, which again is just basically what we were just talking about based on our footprint charts. Yeah, there it goes. They actually came to our single prints. So when we started this class, I mentioned single prints, and some people might remember what they are, but it is basically, or not basically, it is where we have strong lows. So we don't pay attention to what happened pre-market. This is in the regular trading session. So actually, if I just do this, it'll look cleaner. Where is it? So here, from here down is our strong low, right? And then this from here down is our strong low. This is a really strong low, right? And then this would be the power of having those on your chart is how price reacts when you get there. And I will say, when I draw strong lows, I think this is an important thing to share with you guys. I put the top of the strong low or the single print at the next wick, right? Or the next body of the candle, whatever. So like if this was a shaved bottom candle where the body is there and there's no wick, I would put the start of the strong low at the body of that candle. And then the bottom of the strong low would be at the bottom of the wick of this candle. And then what I do is I draw a little box, right? That has, I'm going to extend this out. But on these boxes, you can check middle line. And where that middle line is where I draw the single prints mid or strong low mid. And I tend to find that price tends to react at the midpoint versus at the beginning or the bottom. And so if I was looking to get into a trade when price comes down here, I would really be looking for a reaction right about there, right? And if we move forward, you'll see we didn't react at the top. We didn't react at the bottom. We reacted between the mid and the bottom, right? And we created another strong low. And then I think from there, price bounces pretty hard. I don't remember, but I mean, already so far, this is a good reaction based on massive selling pressure, right? If I turn off or if I turn regular or extended trading hours back on, this is really aggressive selling, right? From that sell side high volume node that we identified earlier. This is where the sell off happened on Friday, was from that high volume node, right? This is where SPY gapped down. And so to have such strong selling pressure and to still be able to bounce from this range is impressive. Hopefully what I'm saying makes sense. I don't think they're able to get much higher from here because, again, we have really aggressive selling pressure. I think they end up pushing this lower, but again, I don't really remember. I don't memorize the charts when I do this. Okay, that's the last candle of the day. So we got to bounce from there. For people that trade futures, this is a good bounce. Like, you would be out of the trade if you were in it. It's 53 points. I can show you guys the math just in case you're curious. But again, we already established like each point is $50 multiplied by 53, $2,600 for one contract of ES. If you caught this, the bottom and the top. Obviously, we're not doing that. But if you caught this range, even if you made $2,000, you're doing well. All right. At this point, just really quickly, since we talked about this imbalance here, I'll show you guys what it is. Again, on the cluster chart, we switch this to imbalance. And what happens is, where's that one? Oh, it's here and here. This is the one we were looking at. But I'll show you examples where it's worked. What an imbalance is first to explain what it is. We're looking at the actual orders, right? And we're comparing the bid versus the ask, and it's compared diagonally, right? So in this case here, 945 is 300% greater than 163, and 3,142 is 300% greater than 922, right? So in this case, the buyers were way more aggressive than the sellers, which created this box that was drawn that goes to the right on my chart. Just for explanation's sake, this here, the yellow numbers, is 900% greater than this number. And red is 600% greater, than this. Okay? So when we have this, what we want to see happen is you want an imbalance to occur at the beginning of a trend. And you can see here we were chopping sideways, right? And so from here, they actually took off and went. And we have an imbalance that occurred right here. And we also have an imbalance that occurred right here, right? It's where we have two of these numbers stacked together creates an imbalance, right? And basically all it is when price comes back to here, we would expect it to react like those high volume nodes where price is going to bounce. And so if we look to the right from there, the next time, is there a next time? They come back to here, we get a really aggressive bounce, right? And so that's how you use imbalances. Again, this is the beginning of a trend, right? It's the beginning of a downtrend. The next time price would come to there, we actually broke through and went higher. But again, we're trading probabilities. We're not looking for, like only trades that worked in our favor. We're doing education here, and sometimes it doesn't work out, right? So same thing here. We have an imbalance that was created here. They brought it up, sold back off, and then from this zone we bounced, right? So The same thing with imbalance that we're looking for with the high volume nodes is we want to see that move up or down. We want to see the full body candle either open and close above or open and close below. Once that happens, we know the direction, in this case, buyers. When we come back to here, we buy, right? Here, it looks like we have a poor high, so we're going to target higher, right? Come back to it again, same thing. You're going to be in calls or whatever. They do the same thing again. We get a little bounce from here, come back and test it again, get a bigger bounce. That's imbalances. The real key for this is two things. We're looking for imbalances that occur at the beginning of a trend, and we're looking for that full body candle either opening and closing above or opening and closing below. Okay. I'm going to close this chart because with it open, I can't see the chat. Go back to here. And basically at this point, I would just open this up to questions, including Emily. If you have any questions or anything that you would like to add, please feel free to speak up. Anybody in the chat that has questions, please feel free to ask questions. All Star already asked a question. Do I move my stop up? Only if it's part of my plan when I take the trade. So in this case here, I was talking about my initial profit target and then my second profit target and my third profit target. What would happen is here I would close one contract, right? And when I close that contract, I would now move my stop down to break even, right? So that if they reverse and come back to here, I would get stopped out, which is what would have ended up happening, right? And then I would have cried over here. But anyway, I would move my stop loss to break even. If they came down to here, at that point, I would then move my stop loss to here. And I would be, willing to risk this much to make this little bit here. So hopefully that makes sense. But it's only if it's part of my plan. If I take the trade, let's just say I bought 5 contracts, but I had no intention of trimming. And I was saying I'm willing to risk whatever, $1 to make $2.50. And this is the trade that I'm looking for. I'm going to be in the trade the whole time until it either hits here or hits my stop loss. I don't, again, unless it's part of my plan, I don't move my stop loss and I don't move my take profit. Okay. No, there was no news at that time, Alan. Nothing that I'm aware of. Again, this is institutional selling. Price came back to it and then it just got smacked hard. So Erez is asking if the low or high is a large area, would the implied move be larger or not necessarily? If the low or high is a large area.
Do you mean significant area?
I'm not sure. Can you explain a little bit better what your question is, Erez? Because I don't understand. If the strong low, so like for instance, this is a really big strong high, right? Like a long wick. I would be closing either the body of this candle here, or actually more likely this right here. So the size of the wick doesn't change anything. I'm going to close way before we come to this level. I have to secure my profits. Hopefully that answers your question. If it doesn't, let me know.
This is a really good refresher class for me. I'm glad I participated.
I'm really glad that you were here, especially because you brought up the Anna Cooling stuff that I wasn't planning on mentioning, but it was very good information that totally applies to what we're teaching. So that was great.
Yeah,
And I really appreciate your time.
of course. I appreciate yours as well and the knowledge.
Oh, thank you. All right, I'm just going to hang out for a couple more minutes and see if there's any other questions. And again, Emily, if you have anything you want to add, please feel free.
I'm not thinking of adding anything. I'm thinking of just a recap. So what I learned today is like if we have a strong low and the price comes again to test it, my first answer was to short it, but then the correct answer was to take it long, but then
Correct.
or take a call. But then if it comes back the third time, we can always watch price action, but then it's more likely that it's going to get taken out because then it becomes a poor low. It's no longer a strong low. So I learned
Exactly.
that.
Mm-hmm.
Um, and yeah, I think this is just good. Exactly what the title is, how to find your entries and exits. Exactly.
Mm-hmm. Yeah, so errors, the wick size doesn't affect anything, no. All Star, there is a way. The only issue is um, it's not extremely accurate. So I don't really want to teach it because um, there's a way to identify it, but they're not always truly imbalances. I mean, I would really, really just highly recommend, like I say this a lot. Um, as a trader, there's certain things that we have to invest in, right? I don't like spending money on stuff that, like, I don't want to say isn't necessary, but like, I don't like to spend money on things like that I would rather buy something fun. So for example, like if I look at my billing on, what's it called? On TradingView, like I spend $600 a year for the premium plan, right? And then every month I'm spending $10 for the US market bundle. And probably the crazy thing about this is I don't even trade stocks. So like I don't even need this, but I pay for it so that I can go live and share levels with you guys on YouTube. Otherwise, I don't really have any use for this. Um, and then the CME group, I pay $7 a month. This is for futures, right? This I do use because I trade futures. So, this is money I spend every month, every year, whatever, for trading. And it's an investment I have to make, in my software to be a trader. And I would say the same thing for Quantower. That $35 um, to get those buy side and sell side high volume nodes, or that $35 to get the imbalances is invaluable. Like I can't even put words on how invaluable it is because you'll find so many amazing setups that will make you so much money with just those two things. Um, the key thing is doing it properly. So like there's people that teach imbalances, and I wouldn't recommend you go and search this up because they're going to teach you how to find them and they're not always truly imbalances. And what they won't teach you is to only pay attention to them when they occur at the beginning of a trend. So whether that be the beginning of an uptrend or the beginning of a downtrend, they'll be like, so like you would want to be paying attention to imbalances occurring up here, or you would want to be paying attention to imbalances occurring down here. Um, and they'll tell you about an imbalance that's occurring in here, right? And we ignore those, right? The same thing with high volume nodes. Like um, a lot of people will forget to mention or won't mention or don't know that you want to see those full body candles below before you get into the trade, right? So that's just all like important information. And again, I would take I mean, this is the one thing you need a computer, right? So if you have a computer, I would invest that $35 without even batting an eye because you're going to find so many setups, not just like on the daily, but monthly. You'll find so many setups. It's just ridiculous. Okay. Areas, yes, it works on 4 hour charts. That would be your weekly levels. So weekly strong highs, strong lows, weekly poor highs, poor lows. Pepino, I do exactly the same thing. So Pepino said, I started to improve a lot of my trading with imbalances and high volume setups. I leave orders at the areas and let them play out since I work mornings. I do the same thing. It doesn't even have to do with work, but like when I see a high volume setup like this, I'll place my order, place my stop loss, place my take profit, and I'll go about my day, or I'll go to bed or whatever it is. Like if it's in the evening, I'll go to sleep and I'll let it play out. If it's in the morning and I have stuff to do, I'll place my orders and then I'll go do what I have to do. And I just let the orders play out for me. I'll start. So you can still, again, you can use it. I just wouldn't use Quantower to trade off of on Mac, but you can install whatever Parallels or whatever that's called, Boot Camp, I don't know, um, and install a Windows partition where you can at least, find those levels after the market closes and get them charted on your trading view ready for the next day. Okay. But yeah, again, I mean, I'll say this one more time. Um, I mean, I don't want to make goals for other people, but I would say that if it was me, my goal would be to get to the point where I have a Windows based computer, because this stuff you just can't sleep on. It's so powerful. It works so well. Yeah, Pepino, I would go to either Apex or well, actually, I would just go to Apex. But if you do want to use Apex, I can give you my code, which will give you the best discount. And then obviously, I always try to say this. It's an affiliate link, so obviously I get a small kickback if you do use it. But regardless of what code you use, you're going to be giving somebody a kickback. But I'll share my code really quick. Give me just a second here.
Is Apex better than Top Step X in your opinion?
I don't like Top Step X, but that's just my opinion. Yes, it is. The reason I say that is because I can use Quantower with Apex, and I can't use Quantower anymore with Top Step. And from my experience, Top Step X has some glitches still. It's not perfect. But also, like, I just don't have access to the charts that are important for me, which is footprint charts, those high volume nodes, and
That comes in Apex's package?
no, no, no. On Apex, you
Oh,
can
your
sign up.
Quantower.
Well, no, on Apex, when you make your account, you can sign up for either Tradeovate or Rhythmic, and Rhythmic you can connect to Quantower, and then you can trade through Quantower.
I see.
So that link I just gave Pepino will give you my code, but you can also just type in this code if you want to. But the link will give it to you as well. What do I think about NinjaTrader? It's pretty quirky. It works. It's a decent platform. It's one of the better platforms. It's not as good as Quantower, in my opinion. And with that said, the things that I just shared with you, like the imbalance chart and also the high volume nodes chart, you can get all of those things on NinjaTrader, but you would have to buy indicators from Trader Dale. And I don't remember how much he charges. I think it's like $600. I can check. Oh, so I think it's 497 now. So the order flow pack, which would include like the indicators for NinjaTrader, is 497. I don't know of another way to get it, or I guess you get all of these for 797. Um, but yeah, Quantower, it's $35 a month. NinjaTrader, this is what you're looking at. Okay. Yeah, phones are not great. No problem, Amanda. Anybody have any other questions before I wrap up here?
No, thank
Emily,
you.
want to add anything?
No, thank you so much. Maybe this is an awesome idea to encourage other people to do, like be on the spotlight whenever you have time.
Hmm.
It was really fun.
Yeah, I mean, I'm up for it anytime. Um, I just don't like how hard it was to get set up.
Yeah.
It was actually a little bit frustrating for me, where like I gave kind of the time frames and how long the class would be, and then people reacted and they're just not available. And I'm not, when I say that, I'm not talking bad to anybody. It's just, like, I get it, things change, right? Like, I could see myself reacting to something like, oh, like I should be available, and then thinking I'm not going to get picked, and then I get picked, and I'm like, oh shit, like now I'm busy doing whatever. Um, but yeah, it was a little bit frustrating getting set up, but I'm glad it worked out so well. And again, I really appreciate your time. I really appreciate your input. Like, you added value to the class, which is awesome. And you brought up things that I wouldn't have brought up, which was great as well. So really, really appreciate it. And I'm sure everybody that tuned in and listened appreciated it as well. So,
Mhm. Keep an eye on the volume, and I'll keep an eye out for the next opportunity. Thank you, Rocket.
all right. Sounds good. Thank you, Emily.
Bye.
Bye. Yeah, no worries, Aries. I mean, it is what it is. Um, what am I doing here? Ending my Zoom meeting. Okay. All right. It doesn't look like we have any other questions. I feel like it was a really good class. Hopefully, you guys feel the same. Um, should be very informative. Um, Again, this is just kind of a roadmap of the key things, my takeaways from Trader Dale's books. I highly recommend reading both of them, and implementing this stuff into your trading. This is, and like what I'm sharing, I think this is important for me to add. I'm not holding back anything. I don't have any secret sauce, right? I'm not some special person. Like, I don't know. I think people see my name and they're like, oh, whatever, like the GOAT. What? No, dude, I'm just a person, right? I study hard. I work hard. I study all the time. I'm always trying to grow and get better. I'm always a student. I'm always willing to learn. And I'm not anything special. And again, the class, I'm not keeping any secret sauce from you guys. I'm revealing absolutely everything about how I look to find entries and about how I look to find places to exit my trades. The hardest part about trading is that psychology of being okay with taking those losses. They're going to happen. You have to be okay with taking the losses. And with that said, if anybody does have any questions, if you rewatch this later, like you weren't able to attend the live and you have a question, feel free to at me in Keenan's Discord. Feel free to DM me. I would prefer you at me where other people can see your question, because a lot of times there's somebody that's too shy to ask and they're going to have the same question as you. And I would rather answer the question for everybody and not just one person. However, if you're shy and you would rather DM me, feel free to DM me. Okay. Um, so again, if you have any questions, I'm available. Reach out. I always try to help and answer questions. With that said, I'm going to be live probably in about 3 hours. We'll do our regular update on SPY. And hopefully I'll see you guys all there. Okay. As always, much love, much respect, everybody. Again, I hope the class was very informative. I hope everybody learned a lot. And with that said, we'll see you next time. Peace out. Bye.